Netflix has now lost subscribers for 2 consecutive quarters. When will the bleeding stop? That's the kind of sensationalist headline you'll probably see floating around the internet over the next couple of days. And that's simply because, as is the case in the media, whenever a large business in particular makes any kind of mistake, it becomes fun and popular to dunk on those businesses, even though everyone continues to use their products and services behind the scenes. Well, I refuse to jump on the Netflix is dead bandwagon, and the reason for that might shock you. Netflix isn't dead. In fact, if you've only read headlines and been covering Netflix or looking at Netflix very, very broadly, then you probably already think that Netflix has now seen subscriber losses in 2 consecutive quarters, right? Wrong. If we exclude the withdrawal from Russia, which of course does have an impact on their business, it means they have less recurring revenue in the future, but it's also clearly not a reflection of a decline in the value of the service or anything that some people will want you to believe. Then in the first quarter, 500,000 subscribers were added to Netflix's platform, and in the latest quarter, they projected to lose 2 million. They ended up only losing 970,000. That means that in total, over the first 6 months of 2022, or the financial year 2022, Netflix has lost a total of 0.5% of their subscribers, which is a tiny, tiny amount. Now, in the scheme of a business that has been growing their subscribers and revenue per subscriber at a massive rate for many years, there is a lot to talk about it, and I do want to dive into what is driving the slowdown in their growth. But let's not be ridiculous about Netflix here. They're not dead. They're not dying. They really had 2 mildly bad quarters in a company that's been around for like 25, 26 years. So let's just speak about what is going on with Netflix with our feet grounded in reality rather than feeding into the media storm which loves to dramatize whatever is going on, particularly when it comes to businesses that sell products or services that we love. Also, I want to give a quick shout out to this schmuck at Barclays who updated their Netflix guidance 2 weeks ago, expecting a 2.8 million subscriber loss. If you ever needed any more evidence that financial analysts out there who have absolutely no clue what they're talking about are very much willing to make unbound or unbased projections about businesses, then here you go. He was completely wrong. In fact, there was absolutely no reason for this guy to update the guidance for Netflix since there had been no publicly available data that had given us any suggestion other than the guidance that Netflix had given in the previous quarter. Anyway, I don't want to get sidetracked. Let's get into the results from the second quarter. Revenue came in at just under $8 billion, which was up 8.6% year over year. And revenue was actually up 13% if we exclude the FX impact, the foreign exchange impact, which was $339 million. Netflix is one of many multinational businesses that earn their revenue mostly in foreign currencies, then converting them into US dollars, and also are businesses where most of their expenses are in US dollars. Businesses in that situation right now are getting absolutely slammed by the fact that the US dollar is getting a lot stronger relative to almost every other currency around the world. And this is really simply explained by the fact that the Federal Reserve has been the one central bank that has been the most aggressive in terms of large central banks on their interest rate increases. So as the Federal Reserve in the US increase interest rates, US government bonds become more attractive. They offer better yields, and that means people convert currencies from other currencies and put deposits in US dollars in the US, and the result of that is higher demand for the US dollar, making it stronger relative to other currencies. And of course, if you're collecting revenue in, say, euros or Australian dollar, and the US dollar is getting stronger, then it means they're collecting less US dollars than they previously would once they make that conversion. On a year-over-year basis, subscribers increased by 6%. However, of course, everyone cares about quarter-over-quarter, and it makes more sense to look at quarter-over-quarter for a business that is a recurring revenue subscription. There's no kind of seasonality to the total number of subscribers that they have. At least we haven't seen that so far. And on a quarter-over-quarter basis, as I mentioned at the beginning, they have lost this quarter 970,000 subscribers. So what is causing them to lose subscribers? It wasn't very long ago that they were very consistently gaining 20, 30 million subscribers per year, And starting this year, it seems to have basically completely stalled to a halt. As I mentioned, if you add together Q1 and Q2, then they are negative 500,000 subscribers for 2022, which is a massive slowdown from the previous years. And management in their earnings interview, as well as in the press release, again reiterated the 4 key themes or 4 key factors that are continuing to impact their ability to gain subscribers, have subscriber additions, but also elevated churn, more people canceling their subscription than typical. Those 4 themes are the adoption of connected TVs around the world, and that's really out of Netflix's control, how technology develops and gets available and accessible to many places around the world. That's something that will just happen over time, and as more people get smart TVs and get better technology for home entertainment, more people will consider subscribing to Netflix on a consistent basis or at all. That's pretty much out of their control. They also spoke about macroeconomics. Again, inflation, the war in Ukraine, these are things that are very much out of Netflix's control, but do have a real impact on how price sensitive consumers are, and I'll talk about that in a little bit. They also then spoke in detail about 2 factors they believe are kind of important to discuss, one being competition and the other one being account sharing. In terms of account sharing, they gave an update on the tests that they'd been running recently in some Latin American countries to try and ask people to pay if they are sharing it between households. The management team seems pretty confident that they can determine which accounts are being shared in a way that that breaches Netflix's policies, and instead of forcing those households to pay more, they're simply asking people to pay more. And the reason behind that, I think, is that it's a pretty bad strategy from a large corporation perspective on a consumer to crack down in a large way, and I don't think they want to do that. But they are aware of the fact that there's 100 million households that are not paying for Netflix but are using Netflix. If they can collect 5% of them, let's say 5 million of those, that's an additional 700 or approximately $700 million in annual recurring revenue. That's recurring revenue if they can collect 5%, right? So they might not even need to crack down to a large extent. They can just ask people if they get a few percent that will do it, and they can collect hundreds of millions of dollars in recurring revenue. Think about that. That's like 4 or 5 in a normal environment, 4 or 5 Stranger Things series every single year, right? So we're talking about a huge increase to the value of the service to all users by doing this. They also spoke about competition and whether they believe that it's having an impact on their ability to retain subscribers and to grow subscribers, particularly in, say, very competitive markets like the US and Canada. And it's been a clear discussion point that, and it's very popular at the moment, to dunk on Netflix for having terrible shows. And it's kind of become this meme of, oh, Netflix is terrible and the quality of their content is bad and no one likes and no one can find shows to watch on Netflix. And the truth is the data just doesn't support that. While you as an individual may not find the shows that you want to watch in a particular week or in a particular month, or maybe ever, maybe Netflix doesn't have what you're looking for, the data shows that Netflix is the most watched network or streaming service on television in the US by quite a large margin. They shared a chart where they showed all of the different TV networks, and you can see that Netflix is getting twice as much viewing time as even CBS, which is the second highest, and it is absolutely crushing every other competitor. And not that I really think this is more of an indication of what critics think about shows rather than what the audience feels about a show and how popular they are. But in terms of Emmy nominations, they did extremely well this year. They came second behind HBO. Last year, they beat HBO. This year, they lost to HBO. HBO had some amazing shows come out this year: Succession, Euphoria, a bunch of shows that were absolutely incredible that pipped out some of Netflix's shows, such as Stranger Things, which was unable to get some lead acting nominations that were kind of stolen away by some of HBO's shows. But Netflix still got 105 nominations compared to HBO's 140 nominations. Last year, Netflix had 130 and HBO had 129. So that's a really interesting battle to watch. As I said, it's kind of more of an indication of what critics think, and what critics think sometimes doesn't, and very often doesn't, align with what actual audience reviews are. So I don't think it's as good of an indication as how people are just spending their time, but it is another kind of measurement that we can use to compare some of these film studios. So if more people are watching Netflix than ever before and they're growing their actual share of viewing time compared to other alternative entertainments, then why are they not gaining subscribers? Why are they actually seeing, they saw a 1.3 million decline in subscribers in the US and Canada alone? Well, management believes that they are missing out on and losing their price-sensitive subscribers, which are not by any means the majority or even any large percentage of their subscribers. As we mentioned, in the first 6 months of this year, they've only lost 0.5% of their subscribers. So the vast majority have stayed, especially in the US, as they've pushed a significant price increase through their subscription. But it would be ridiculous to not notice the fact that we are going through a period around the world where there is massive inflation. And we actually don't know how consumers will react to this in terms of streaming services, because we haven't been through an inflation crisis this bad or even anywhere near this bad when streaming services have been popular. So we're really seeing how this affects consumers' behavior in terms of what entertainment they choose to keep and what entertainment they choose not to keep, especially over short periods of time. And I think it's very, very likely and very, very reasonable to say that inflation, macroeconomics, and the price increases that Netflix has pushed to its subscriber base is a reason why they've had a slowdown in their subscription additions. And management has a plan for how to deal with this. We've spoken about this before, but they are, of course, bringing out their advertising tier, which they recently partnered with Microsoft to do this. And it looks like in developed ad markets such as the US, UK, and maybe even Australia, they'll be rolling this out next year. So we'll be able to see how this kind of plays out. Management, again, is very, very confident that they can get very, very good average revenue per subscriber from this tier. And their aim, of course, is to recover people who Netflix became too expensive for without ads, recover those people, and then also be more accessible to people who just never would have considered subscribing to Netflix. I also just want to talk very, very briefly about my investment in Netflix, because I know that's something that people are interested in. And I think that there is value in using me, seeing what I'm doing with particular businesses so that you can see how to apply similar principles to other businesses. I don't want people to copy me in my investments. I think it's a stupid idea, and you will just buy the index if you don't want to do the work in analyzing businesses. But for those who are curious about how I'm going about navigating my investment in Netflix, just to give you the headline, so the stock was actually up, I think about a total of 13% basically on this earnings release. And that means that my investment in Netflix is positive. So even though the stock is still down, I don't know, I think 70% from its peak, I wasn't buying the stock anywhere near $700 a share, 600, 500, any of that. My average price is pretty close to 200, in fact, slightly above 200 per share. So I was buying most of my shares below $200 per share, and that means that I'm actually up on my investment. And that's a lesson in, yes, the stock's chart looks terrible, but I think Netflix is an amazing business. And I think at the price that I paid for it, the bar for how they need to perform in the future is pretty low. If you think about my investment as wanting to generate a 15% return over a decade, which is 15% per year over a decade, is about 4 times your initial investment. That means that with my average price around 200, then the stock only needs to go to 800, right? And it was at 700 previously. So you can see that by paying an appropriate price for the business, the bar is so much lower than if I'd paid $700 per share for it and I wanted to 4x my money, then the stock would have almost need to go to 3,000. But at the end of the day, this is just a quarter. Even if it was amazing, even if it was terrible, it's just a quarter. It's 90 days. Often 90 days, especially during a recession or an inflation crisis or some kind of broad economic pain, 90 days really isn't going to tell you anything about how the business will perform in the future. You need to be looking to the underlying business and what competitive advantages that it has. What does the management team look like? These are the things that matter. So even if next quarter is a sub loss, even if the quarter after that is a sub loss, I don't care unless something fundamentally changes about in terms of how I view the advantages that the business has relative to its incumbent legacy media businesses that are trying to catch up to Netflix. Then I will continue to invest in the company and feel confident in it. And honestly, if the business stays in trouble for the next few quarters and the stock stays cheap, it just gives me the opportunity to continue to acquire more in a business that I love at a good price. So with that said, love to hear your thoughts down in the comment section below. But I hope you guys got some value out of today's video. And if you did, make sure you hit that subscribe button, hit the like button. And with that said, hope you guys have a great week, and I'll see you in the next video.